Hi everyone, hope you're all doing well. Welcome into today's video. We're going to do the monthly review of the public Etoro account and see how it's all doing. So I started this Etoro account at the start of the year. Well, you can see here this little red section. I started it on the last day of 2024, which was a terrible mistake because I've got to put up with that there now. But apart from that, I did start the account really at the start of the year, the 1st of January, to try and increase the transparency. I wanted to show you guys publicly the return that I can achieve, because previously I've done the return but it's all been in private accounts. So just to kind of prove that those are the returns, I thought, okay, what is a great app platform I can use to show those returns a little bit more transparent? And that was Etoro. So I did create a popular investor program on Etoro, and if you do want to join and follow me on there, guys, there'll be a link in the description and also in the pinned comment section as well. But we created this to try and increase the transparency, and so far this year it's not been going too bad at all. We have managed to achieve a 32% year-to-date return, which is incredible compared to the S&P 500, which is up 14%. So we have significantly outperformed the S&P 500, which is absolutely amazing. I mean, the aim is to slightly beat the S&P 500, but to double the performance is super. If I could achieve that every year, I would snap your hands off right now. You know, the main reason why we do individual stock picking is to beat the S&P 500, and yeah, that's obviously what we've been able to do here. So for you 28 copiers, I hope that that has been very successful for you. Well, I know it's been successful for you guys. Just to let you know, I don't know if I can take on any more copiers at the moment, because I think I've got the max capital allocation to my portfolio at the moment until I upgrade it. So I've got to upgrade it next, and then we can take on some more copiers from that point of view. But yeah, even to be up 32%, and we've had a bit of a pullback. Like the last couple of days has pulled the account back down a little bit at the moment, and we're still doing okay, which is the positive thing. So what we'll do now is we'll go into the portfolio. I'll spend a minute or two in every position and my thoughts on where I'm at with everything. So I hope that is all useful. So at the moment, the largest position, which is Google. What a year this has had, up 67% year to date. I mean, yesterday was a great day for Google, up 6%. I think after hours it was up another 2%. Yeah, I am thinking that I love Google. It's a position that I would probably hold forever. You know, you get so many things with that. YouTube's going to be massive still in the next few years. Google search is still going to be massive. You got Waymo as a free bet, the AI side of it. So I'm a big fan of Google. The only thing is that what always makes me nervous, and as you guys probably know, is that I like doing the opposite of the market. When everybody loves a stock, that's when I get a little bit concerned of going, okay, are we getting a bit bubbly here? People are now paying $318 for Google, and a few months ago, nobody wanted to pay $163 for Google. So with that sort of point of view and my mindset, how it works, you know, be fearful when others are greedy, be greedy when others are fearful, Warren Buffett. My thinking is that I probably will trim Google at some point, maybe even today, just to lock in some profit there. So I probably will be a little bit more active trimming Google, but yeah, I do really like Google, to be fair. AMD, that was our large position, but we have had a bit of a pullback, as you can see here, down about 18%. I mean, we're still up 78% year to date, which is fair enough. Quite a few people have asked me about, you know, buying AMD. I probably, my personal self is I've already built quite an aggressive position up in AMD. Like second largest position is obviously significant. So I probably, for me personally, I wouldn't buy AMD, and probably unless it gets to like below $150. So for me, I'm not in really any rush to buy. You know, people ask me all the time about what do they think about if AMD should be a buy right now. If you don't have a position, and you know, that's up to you guys. You know, a quality stock on a 20% dip, that's your decision to make if you're so desperate to get into a position. But for me personally, I'm happy with the average that I have, and at this valuation I don't really need to rush in too much, so I'm probably going to play that a little bit more careful really. Hims and hairs were up 31%. That's had a big pullback. If you look here, the stock's had it's probably, if I go from the high to the low, yeah, about 42% pullback. It's had a little bit of a bounce recently, last couple of days. It's bouncing up a little bit. Still up 49% year to date though. That's obviously absolutely amazing. I think it's gone too low. I think the drop off in Hims and Hers, in my opinion, has been a bit too much. So I am happy to start adding back into the position of hims and hers. So that's kind of where I'm at with the position at the moment. Adobe, we have got Adobe up to the 4th largest position now, which I think is very much needed for a company of Adobe's quality and at this valuation. They do have their earnings, the Q4 earnings, on December the 10th. So this year, my attempt is going to be to have a long time off at Christmas. I'm going to attempt to leave doing videos for like a good 2-3 weeks over the Christmas period and have a proper break. So after the probably Adobe earnings, that's going to be towards where the end of my my videos for this year are going to be. And that's a big one because we saw Q2 was amazing. Q3 was amazing. This is the Q3 in September time, and you can see here really good beat on EPS, revenue going 10% a year, hiked up the guidance because AI is helping them. And yet the stock in that time frame from those last 2 earnings report has just seen Adobe go lower and lower and lower. And if they bring out a good Q4 update, so that will be 3 solid updates after I've owned the stock now, that's where I start putting the question about, does Adobe come number 3, number 2, number 1? So we'll see. PayPal, we have bumped PayPal up to the 5th largest position now, which I think is very much needed. The sell-off that PayPal has had in the last month, down 13%, when the last update, financial update, was the last week of October, was it? And that, in my opinion, that update was like a 10 out of 10, and yet the stock market has sent it down this much. Incredible. So the fact that we were talking about PayPal last week in the $50 range, I will snap your hands off and I will add into that position. So I've got PayPal now into a top 5 position. Same again, if they do another solid update, I would have the conversation about PayPal going to top 3 position if they do another solid update. Mercado Libre. So Mercado Libre's had a pullback, to be fair. You can see here, really since May time, the stock has had a pretty decent pullback and it's gone below 20%. And I've said to you multiple times before, in my opinion, when Mercado Libre drops 20%, that is my favorite time to buy, and we've had that dip right now, so I am adding into Mercado Libre actively. Mercado Libre, once again, that would be a position that I'm willing to go top 5 position in. I could go top 3 position in. I really like Mercado Libre. You look at the growth numbers, very good growth numbers. They're expected to grow 30% a year-ish. Profit is ramping up significantly, and they're not even in the position to like focus on profit yet. They're still very much in the growth stage for the next 5 years, but they've got so good amounts of profit as well at the moment. And that's going to put them about 32 times 2026 numbers, which 32 times for a company growing at 30% a year, that's good value. I normally say that, in my opinion, Mercado Libre is normally about a 60 times earnings business. And you can see right now it's about 49 times earnings, and that's including the 20% drop that it's had at the moment. So if you take the 20% drop out, 60 times earnings. I normally think Mercado Libre, for the growth that you're getting here and the clear growth it's going to have for the next 5-10 years, is about a 60 times earnings business. So if you're telling me in a year's time it's going to fall to 32 times earnings, I think you have that metric expansion, and you could argue the case right now that Mercado Libre could probably be up to nearly double potentially in the next year if we do get that metric expansion. So we'll see if that does happen there. So we've got Monday. Monday has really bumped up. I can't believe how much Monday has dropped as well. That's down a decent amount. So adding into Monday. Shift 4, we've been adding into Shift 4 at the moment. I really like Shift 4 valuation. I mean, let's just have a quick look at it. I didn't load this one up actually, to be fair, but I'm going to do it right now for you guys. Oh, wrong one. This is what happens when you have 2 companies that share the same ticker symbol. Let's go on the correct one. We went on the UK one. Let's go on the US one here. So you look at the revenue side of it. Revenue growing at nearly 30% a year. And we were talking about Mercado Libre and growing at 30% a year, that should maybe put you on to about a 60 times earnings multiple. Well, look at Shift 4 payments. They're currently going to be on next year's numbers 10 times earnings, which I guess with Shift 4 payments, the profitability are a bit less than the Mercado Libre, a lot more competition, the balance sheet's a little bit more ugly. So let's assume more like a 30 times earnings multiple. Well, even if we assume a 30 times earnings multiple, I mean, look at the big discount that you have there at the moment. So yeah, watch the Switzerland Group. I'm surprised that's not up more than what it currently is. up around 22%, but we've had the tariff or the trade deal announced between the US and Switzerland, so I'm surprised that's not had more of a rally off that. New holdings, that's up 41%. I'm a little bit like, do I take a bit of profit off the table with new holdings? But I don't know if you saw the last financials. They were impressive, like 10 out of 10 good. And the stock is still at relatively good valuations. It's not got the forward P on here, but it's around about 20 times forward earnings for new holdings. And they're growing at like insane rates. So I'm thinking, well, do I just let that keep running? You know, the valuation's good. The financials have been amazing. You know, let your winners keep winning. So thinking on that one. Shark Ninja, yeah, they had so good earnings, and yet the stock is down. Incredible. It's really surprising to me to see the amount of opportunities that are still in the market right now. Something like Shark Ninja, yeah, amazing. Zotefoams were up about 45% on. Yeah, I love Zotefoams. We have taken a little bit of profit off the table, and it had a pullback, but the bounce back has started to happen, which is good to see. So I'm still going to hold that Zotefoams position there. DraftKings, we're down 80. Wow, I didn't know we were actually down that much. We're down about 18% on DraftKings. So with DraftKings, you guys are probably aware, I used to be ultra bullish on that position. Not as ultra bullish as I am nowadays. That's led DraftKings, that was once my largest position, to certainly come down the pecking order, and I've been locking a decent amounts of bit profit on that over the last couple of years. I don't think management team have been quick enough to improve the business as they have been previously. And there's a few things I don't like. So there's the lack of iGaming states coming online. It's the states that are active are putting up the taxes without allowing iGaming, which is, I didn't think was going to happen. The prediction market, they've been very slow to move into. And the sport betting outcomes keep getting repeated, that they're very poor. They say that's temporary, but it keeps happening. But I look at DraftKings and I think some of these states that are being online are still growing insane rates. So even if they don't get new states online, they could still do well. And then if they do get any of these new states online, you could see a really big bump up when they do come. So the key drivers are still there. They're just not coming as fast as what we thought they would, or I would as well. We also have the management team being a little bit slow to react. So I'm kind of watching that and seeing if there is some kind of developments there. We have now got the prediction market, which is good. The other thing as well with DraftKings is I've got to look at Flutter's earnings and see what's going on there, and see if they did better numbers than DraftKings by a significant amount. And it might be worth switching across to Flutter if that's the case. But also to consider that, I've got to think about that we have the budget coming up. So if I was to switch to someone like a Flutter because their numbers are a lot better, I've also got to consider the budget, because obviously they have a lot of UK exposure, and then they might get hit on Wednesday, tomorrow. So that's kind of up in the air at the moment, what we're doing with DraftKings at the moment. Meta, you know what, probably on this dip I should probably increase that position slightly more than where it is right at the moment, to be fair. Card Factory were up 6% on. I'm surprised we're not up more, because their financials have actually been pretty good this year. VF Corp, after having a big pullback after the earnings, which were actually pretty good, it looks like they've started to bounce back up again. So, yeah, happy with VF Corp. JD Sports, that used to be a lot higher, you know, and I did lock in quite a significant amount of profit. They've had a major pullback in these last few days, and I'm thinking, is it time to increase that JD position again? Potentially so. D-Local, we're up 9% on, but that's had a big pullback after the earnings, which I thought were good earnings as well. So maybe D-Local needs to get bumped up the list. So I would say that maybe JD should be about here. I think maybe D-Local should be about here, under maybe new holdings potentially. So those are potential ones that I could add into at some point. Greg's down 15%. That's one that I need to add into. I think that's very attractive levels for Greg's. I think I looked the other day and it's getting close to like pandemic lows, which is insane. It shouldn't be that low. I know they've had a few issues, but let's not be ridiculous here. That's what we've been. Amazon were up 35% on. Never got the position pull out fully, but I'm happy to hold those shares. Same for SoFi. I didn't get the position pulled out, but built out quick enough. But happy to hold those shares because it's a quality business. Same with Shopify. Barrett Redrow, we're down about 10% on. At some point, and Taylor Wimpey as well, exactly the same. At some point, these house builders have to have a bounce back. So I probably will have a nibble at them every so often. Evo, I am very tempted to run from that position. I've been very disappointed with the management team. You know, they've told us that certain things are going to get better and they're not getting better, and that's concerning. And then you have on top all the issues that are similar to the DraftKings, you know, with the lack of iGaming states coming online. So I'm willing to give it maybe one more quarter, maybe two more quarters, but that is very much high up thinking, is it time to cut? The thing that's making me hold a little bit longer is that they have their dividend. They do pay a lovely dividend, but it's paid annually. So you get it in like April time or May time. And I'm kind of thinking, just wait for that dividend, because then I'll get another, whatever it is it 5% yield at the moment or whatever it's at? So get that dividend paid out, and that will also help stomach the losses a little bit more. So that's what I'm also thinking, and that's why I can give it one or two more quarters just to see if the financials get a bit better here. We've got Evolution, Enphase. You know what? Considering all the things that have gone wrong with Enphase, I'm actually very happy with their earnings. I would like to buy more, but the problem is that I've got to see how they do next year when all the IRA reduction credits go, and see how they do then. But the other catalyst that they have is if these interest rates cuts are going to come, that's going to probably outbalance the IRA cuts. So really watching that one. Taylor Wimpey we just covered. Money Supermarket at the moment, I'm not sure on Money Supermarket. I've got that for a lovely dividend, which we have been getting. But the thing is that I thought we were going to have some share price appreciation, but it seems like that they're just not getting the share price appreciation at the moment, and they're just not growing. The switching market just doesn't seem to be coming back at the moment, and it's with all these opportunities around here, is there a point where I think, you know, is it better to put it into a Greg's, for example? Next year's numbers, the revenue is expected to grow a little faster, to be fair. The net profit is expected to grow, not at too bad ranges, and 10.9 times earnings isn't too bad. Yeah, I might give it a little bit longer, but I really got to start seeing that one kick on a little bit at the moment. Mobico, I think their earnings have been okay. Obviously, they've been not amazing, but for the valuation you're at with Mobico, I don't know how it's down that much. I always keep thinking about buying more, and then I just think about the risk element. I'm like, no, I just can't keep buying more. But I mean, just look at the downtrend of the stock. It's gone from about 86 million down to 86p down to 21p. And the revenue has been pretty stable, considering that they've offloaded part of the business to pay some debt down. So that's probably been pretty good. The net profit, not a great metric. So it looks like a big loss, but they had a one-time write-off. So they're actually profitable if you take that one-time write-off. And this year they're expected to close at 42 million in profit. 60 million in 2026, and let's not forget in 2019 they did 141 million, so they should be able to get close to them sort of levels. And if they do those levels of profitability, you're down about 2 times earnings. It's like, so the market clearly thinks they can't do it. I don't know. We'll see what happens there. I'll wait until we get another financial update. Warpaint, yeah, that's absolutely annoying, because I actually tried to sell out my Warpaint position in Etoro months and months ago, and it wouldn't let me. You can see here it's banned, and then I can't buy it because once again it's banned. So I'm kind of stuck with this Warpaint position, which isn't my fault. It's really Etoro's. They won't let me do anything with the position, so that's just staying there by the looks of it at the moment, which is a little bit frustrating. But yeah, that's everything, guys. So yeah, happy with the performance. Great year for us so far. Happy with how PayPal, Mercado Libre, and all these new positions are bumping up the list, and hopefully this sets us up for a good year in 2026. We'll see what happens anyway. So thanks for watching. Thanks to all you guys that do follow and copy the Etoro account. Once again, if you do want to join, I'll make sure there's a link in the comment section and description. And the next update I will do for you guys is in December. So see you then, guys.